was purely a derivatives play. It was purely open interest that was pushing this. Probably, I think stocks were also going for their all-time high. There are stats and data that I back it up with a potential blow off top of around 150,000, something like that. Could be conservative, could be over, but that's
I'm here with my new acquaintance, James. Thank you, James, for joining. We had some time zone difficulties, but we finally made it work. I've been looking forward to this
yeah,
because we're going to be talking about Bitcoin. James is an excellent chartist. What I don't know what you call yourself, analyst for Bitcoin, Bitcoin's price actions. So we'll probably be looking at some bullish charts here, talking about where Bitcoin's going in the future and perhaps when it's going there. So James, I love it if you could share your background and your journey online and Bitcoin.
yeah. Funny enough, I just whilst I was actually waiting for you backstage, I did a tweet. But yeah, I started off being in data and analytics. Always found that kind of fascinating. Being in like the tech space. So I was at Hasbro in 2018, graduated, went to Hasbro, the toy company, and you're told get on the corporate ladder, work your way up, and you'll take over the company. So that happened, and it wasn't obviously what it was told to you essentially. Um, so obviously the 9 to 5 grinding, it's like I don't want to do this. And then the tweet was just encapsulating that I was actually there when it was actually at its peak, around $100 a share. And because I looked today and the share price has collapsed by 50%, and I wasn't surprised. It's missed 3 EPS misses in the last 3 back-to-back quarters. So I was like, I'm not surprised. It's looking forward, looking 5, 10, 15 years into the future and actually seeing what's actually going to happen. And you've got to kind of pivot to that, in my opinion. Like that's like why you're here, why people in the space are. You can see traditional finance analysts don't really understand it, and it's obviously not a gamble, speculation, yes. So you're kind of going off that and your passion. It's what you think is right. So I left Hasbro. I went to a Swiss hedge fund called Seidler and Co, and that's where I kind of understood and was taught on-chain analytics. So again, being in that data, crunching data, it was quite remarkable to see the in-depth data, how it all works, and what you can slice and dice. And then reading the Glassnode reports on a weekly basis that Checkmate put out. If you have read the first ever Glassnode report, it was so different to what it is now. So that's how far on chain and analytics has come in this short space of time, which is really refreshing. And he's like been a pioneer for it, and some other analysts. So like it's just great to be part of that kind of space and interacting with these guys. You learn so much. And then I met Crypto Slate, crypto media company. They wanted more on chain, they wanted macro, they wanted Bitcoin, try and pivot to this. So yeah, it's been fascinating, and how the way the world's now evolving, is quite remarkable.
Yeah, what I love about it is what I like about on-chain analysis. I'm not a trader, I'm not a day trader, and of course, everyone watching this, I strongly encourage you to avoid trading because the vast majority lose. I know a lot of people that have lost money, but to me, the beauty with on-chain stuff is that you get to watch human emotion in real time, especially when it comes to Bitcoin, and you get to see, like, not speculate, oh, this is what people are doing based on Twitter sentiment or Google sentiment, but like you actually see where people are putting their money, like are they putting their money where their mouth is, so anyway, that's what I love about it, and that's why I'm happy you're here. You mentioned Hasbro stock, right? So this is,
Yeah,
yeah. So I was just looking this up when you're talking. So 53% loss in the last 5 years. That's pretty
yeah,
brutal. Because the currency we're measuring this from within is also down probably 25 to 30% at least. I mean,
yeah,
goodness, 30% for almost 5% today. That's
yeah.
wow, that's brutal.
And yeah, and it wasn't, and I hadn't even checked the reports or anything literally today, and I wasn't surprised. You can see that Hasbro just being a corporate company, and then you kind of extrapolate it out, and it's exactly like the fiat system. It's you've got the people at the top, the white privilege essentially, that don't want to help you, don't want to kick you down. You're burnt out. You're meant to work harder than your pay. Maybe they'll dangle a 10% bonus in front of you if you're lucky. And it's kind of like the system that we're in. So I'm in London, and that just actually outside of London, it's like that. It's a very nice part, but I live with my parents, so you're told to do all these things, go to university, work hard, and I've had every single advantage in life. And COVID came about, and I've been with my girlfriend for about 5 years, and we were like, let's buy, because that's the normal way, that's the progression of life. And if I wasn't in the markets, if I didn't understand it, I would have bought in COVID. I would have bought, say, a £600,000 property, because that's pretty much the average price in London. And our wages aren't reflected to that. That's, I think it's a 15x your salary, pretty much. And we're now seeing, and that was also an argument that we had to have, because obviously you want to move out, you want to do stuff, but you're like, no. And I am right. It took 3.5 years to realize that the property market in Western countries is effectively almost going no bid. The entire, or pretty much the entire UK economy is built on property transactions, and every day I'm looking at Zoopla, Rightmove, and it's different to the US, because in the UK you have these short-term interest rates, so 2 or 5 year typically. Yes, you can have longer, but I think that's a bit more unusual, as opposed to the US where you have 30 years, so you're locked in for pretty much the duration of your adult life. So all these 2 years are coming online. If you bought them in 2021 at 0%, 1%, 600 grand, say, all 5 years coming online just before COVID. And we're really seeing the repercussions now. But we haven't actually got to the point of the breaking point, because unemployment is still at 40-year secular lows. And this is where my fear is, that once the unemployment starts to spike, and we have seen 4 consecutive months of unemployment rising, that when they lose their jobs, then the house goes, and you'll get this vicious cycle of selling. For my generation, that's great, and we're going to see all these boomers get wrecked from a pension perspective, the bond perspective. Got a chart for that as well. And it's this tussle, and I get it, but it's hard to understand it from my position, and then you're looking to it from a boomer position, that they don't want their assets to fall. It's important for them, it keeps everything going, but it is the inevitability of it's just fugazi. These valuations don't make sense, and you're seeing this tussle in real time of our generation versus boomer generation, and something has to give. The way that this is going to happen, we will get this inevitable deflationary collapse. Everyone's cheering on. Once that happens, the Fed or central banks will get the money printer going and rates drop. But all that's going to do is it's going to wipe out the middle class. It's not going to increase productivity. So that's the bit that I don't know what's going to happen after. But I know from our generation that we'll have the energy, we'll have the nous to steer for what's coming. Can't always prepare for what's coming, but I know, looking at the boomer generation, they're tired. They've seen 4, 5, 6 recessions. They're pretty wiped out, and they think they can cling on to what they've got. But I can't see it happening.
Yeah, I agree with a lot what you said. To be a little bit the contrarian, my view is that, yeah, house prices, stock prices, valuations everywhere got to come down, because they're completely insane. But the problem is that we're dealing with political currencies that are not sane, and they can't become sane. So my thought is like, okay, housing starts to roll over, stocks start to roll over, everything starts to roll over, deflation everywhere, implosions everywhere. But because it's systemically important, both to political interests and banking interests, like, okay, maybe things begin to come back to reality, but then the faster they come back to reality, the faster we have to continue the delusion, and this is the dilemma. I agree with
Yeah.
everything you're saying. Same thing's true with Canada. Same thing's true in Australia. People are refinancing higher rates. People are have adjustable rate mortgages. Property values are 15x or more annual income. It's just people in America think our real estate's crazy, or that are it's crazy elsewhere. And then likewise, America has crazy stock valuations. Elsewhere, it's a little better. So it's interesting how that dynamic's different. But ultimately, at the end of the day, I guess my perspective would be default or print, and we'll have
Yeah.
some defaults, but then we'll just print again, and the absurdity will continue until hyper collapse or
But
hyperinflation.
the defaults are a natural way of life. It's that I'm for capitalism. I'm for and free and open market. Let the good companies succeed. Let the bad companies go bust. The issue is obviously that we have those few at the top that choose what should be living and what shouldn't be living, and that just creates a whole load of issues. Like if I went into the UK data of our pension to GDP is like over 120%. So how are you keeping this aging population, which we haven't even addressed? That's the biggest elephant in the room. How are you keeping all these old people on life support? You've got more people taking out the system than putting in. So yeah, I completely agree with you. It's default or print. But that scenario of printing, I don't see how it doesn't. Printing doesn't lead to growth anymore. We had peak growth. Technology is deflationary. So it's like they're in a catch-22 position. We've got this credit-based system that needs to keep eating. So yeah, it is going to be fascinating to watch it all unfold. I think, and I speak to my brother about this, who's a few years younger than me. He works for Salesforce, and we complain that we're a generation that obviously didn't get anything, and the boomers got everything. But we're also in a time where we we're probably a bit too young to have maybe kids now and stuff like that. So we have this opportunity to accumulate Bitcoin, and I think that's the way you have to look at it. That we've been given. All right, we haven't been given the best hand, but the hand we have been given is an opportunity to accumulate Bitcoin at a very aggressive rate because our overheads are low.
Yep. Yep. I agree with that. We're transitioning right from explaining the problem to the hopeful solution here. And I have to say, I'm an optimist. I'm very pessimistic when it comes to fiat, but it's like
Yeah,
if I were to choose between 1960 and a better monetary standard, let's say, versus today, I choose today because really the prosperity gains are not numbers. It's technological progress, right? Medicine is far better today than it was then, and I'd rather be alive today than 20 years ago and have my youth because the
yeah,
future hopefully is brighter. And so that's why people like you and me are here advancing Bitcoin because we think it increases the probability of sound money and lowers the probability of war. So yeah,
yeah, yeah. The unemployment rising that's coming, obviously, and that's the positive correlation with interest rates. That's, I think, the next thing to warrant. So I see everyone with the flash cars or the watches, and I'm like, that's great in 0% land, and everyone's having a great time. But what happens actually when the crime starts to come? What happens when there's geopolitical tension? This is something that I maybe because again we are Gen Z and we can't really understand that boomer mindset of gold. Uh, what are you going to do? How are you going to take that across countries or move across jurisdictions? And again, that comes down to property. On I was a huge advocate for home ownership because that's what I've been told. Get on the property ladder, but renting is so desirable because I'm watching the UK and London fall real quick, and I'm like, hmm. So, for example, in Q1, I'm moving to Asia with my girlfriend. We're going to like Bali, Philippines, and Japan, working out there as a digital nomad. And that's an opportunity that boomers, or yeah, like you said, 20 years ago, 30 years ago, you couldn't enjoy. So I think it's, yeah, there's a load of bad stuff, but I think it's having that positive mindset and going for it. Whatever there is good, you have to leverage it.
precisely. As I always say, saving is inherently an optimistic action, right? Why save if you think the future is going to be pessimistic, right? Because like, why save in the underlying currency of a society that you think is not going to exist, right? So why not
Yeah,
save? And then I'm like, okay, dollars versus Bitcoin. I think Bitcoin economy is going to survive much better than a dollar economy is going to survive. So it's like, oh, but Luke, what if Bitcoin fails? It's like, well, then don't buy Bitcoin, right? I mean, it's that simple. So
Yeah.
anyway, speaking of Bitcoin,
Should we get into some
what are some of these charts you have here?
Do you
Help
have to
us.
share?
I think it's enabled.
No, it says host disabled it.
Oh, oh boy. Wait a moment as Luke does his boomer tech here.
Yeah, here we go.
Okay, you should get it now.
Yeah.
Great. You'd
Screen
think we'd have that figured out
grip.
now as young Gen Zers. Anyway, ooh, colors.
Uh,
Okay, what do we have here?
it's all about colors. I need to get rid of this.
Okay,
A
so we're looking
few.
at short, long-term hodler thresholds. So we have Bitcoin price in black here, the blue section with the black line at the top. We have short-term hodler supply in the magenta pinkish color line. And then we have BTC long-term holder supply in the dark blue line.
Yeah.
So tell us, that's what we're looking at. What's it telling us?
So I think there are a few charts that really resonate with me. And I think if anyone's watching this YouTube or any of the other Bitcoin shows, that you kind of see that these guys are borderline nutcases. And I'm happy to be called a nutcase. That's absolutely fine. And the blue line obviously represents the long-term holder supply of anyone that's held Bitcoin for over 155 days. And I think, and that's the Glassnode terminology. And I think it kind of does resonate with me that once you're in Bitcoin, you're purely in it for the first time for the fiat gains, unless you are some incredible human that can like envision way beyond. But I wasn't that. You were in it for the fiat gains, and I think once you cross that psychological barrier of being a short-term holder to a long-term holder, it also depends when you came into the market. If you came into a bear market or a bull market, but we are seeing the greatest record divergence between a long-term holder and a short-term holder. So yeah, the blue line consistently goes up. When we have those bull runs in 2013, 2017, 2021, you'll get that dip of long-term holder supply because they are deemed smart money. They are selling into profits after holding for so many years. And then you get the inverse. So you get the red line, you get the short-term holder supply, seeing those fiat gains, and they want in. So they'll come in, drive the price up even higher. And it happens every single time. But what's fascinating, I believe that the 2021 bull run was interrupted. The peak of the bull run, we had two peaks. We had the beginning of 2021, and then we went into like this bear market in May 2021. So all on-chain indicators were saying bear market, bear market. And that's what caught me off guard in November 2021. It was purely a derivatives play. It was purely open interest that was pushing this. Probably, I think stocks were also going for their all-time high. And that was when Jerome Powell and central banks were like, all right, we're going to start raising rates. And I think that's when Bank of England raised first in December 2021. So it was almost like that market wanted that last bit of euphoria just before rates raised. So that second bull run within 2021 caught me off guard. But yeah, if we're seeing record divergence here in a bear market, which usually happens, but we've just seen Bitcoin increase 20% in the last 10 days or so, 2 weeks. And we're hovering around 33, 34,000. So you expect there to be some short-term noise, short-term hodlers going up. There isn't. They're going down. So I did a chart yesterday showing 24-hour hodlers essentially, and that's traders, but that's also people that are price sensitive coming in. That's at an all-time low. That's lower than the 2015 bear market. If you go on the Google search trends and type Bitcoin, that's like at all-time lows. So and this is why I think this is still a sustained bull run here, or sustained run, because there is no outside noise. Maybe a few messages from people saying what's going on, but this is really healthy. Again, the order bit will get thinner, less supply coming on. So I think it was over 15 and a bit million Bitcoin out of the 19.5 million circulating supply are liquid. So that's essentially Bitcoin off exchanges. And then there's like 4 million or so Bitcoin roaming around, defined as liquid or highly liquid. So this is kind of the trading Bitcoin, but that is coming down at a very aggressive rate.
Yeah, yeah.
So it's looking extremely, extremely healthy at the moment.
Yep, I fully agree with you there. Could you clarify real quick the blue shaded area versus the red shaded area? What's the difference there? Super quick.
Oh, so the 155 days, this is the short-term and long-term holders. So 155 days ago from today, 5 months and a bit
That's
is what?
defined short term.
Yeah. So
Okay,
so whatever 5 months ago was is where the blue line and the pink line meet together.
I follow.
So
Okay.
that's when the short that's when that's the crossover. So like for example, when we saw the FTX collapse in November, you then go five. If I went into a Zoom version, 5 months later, we'd see long-term holder supply going up higher because
Yes.
that's the short-term holder crossover to the long-term holder.
Mm-hmm. Okay, so if I could explain this in perhaps simpler terms, I know a lot of people that watch my show are relatively new to Bitcoin and this kind of thing. So to make it a little less intimidating, so like we said, the black line is Bitcoin's price, and that's on a
Yeah,
logarithmic scale. That's why it looks a little different than it looks on CNBC or Fox News, right? It's a more progressed curve than a volatile line, right? That's the black line. The pink line, the magenta line, that's what James is talking about here with these short-term holders, that over time the trend is down. I mean, I'm looking right here at late 2017, early 2018. There were more speculators in the 2017 market, more short-term speculators then than there were in the peak 2021. And now
and
there's dramatically less. Yeah,
that was my theory where that bull run got interrupted with the FTX sales, all that
precisely. Yep.
rehypothecation of Bitcoin. We never got our blow off top, which
Yep.
probably would have taken us to 100,000.
And I would add, and I agree with that. And I would add, in addition, not only was the last bull market perhaps tempered, but if we look at the blue line, we see that it's nothing but up and to the right for long-term holder supply. So all this is telling me that there is less and less desire for short-term speculation and more desire for long-term conviction. I mean, that divergence, especially 2022 onwards, is just crazy. Like there's nothing before it like that. I don't know if you want to take us off screen here, off screen sharing, but my
Oh,
point.
I've got a few
Oops.
charts if you wanted to go through
Yeah. Oh,
them.
oh, yeah. More charts. Great. Okay. Yeah. Let's go to the next one. So this chart to me is
Uh,
very bullish. We've never seen anything like this before. Okay. What's our second chart
yeah.
here? Okay.
So the
Drawdown from
second and
all-time
third,
high. Mm-hmm.
the second and third charts are, and this is where Bitcoin is very different to all the other altcoins, that Bitcoin will continue to reclaim its all-time high. So in 2011, we had a bear market of over 95%. Bitcoin's dead. 4 years later, going in with this halving cycle, 2015, bottom was about 85%. 2019, 80%. So you can see they're getting high, the drawdowns are becoming lower or less severe, still extremely drastic, but less severe. And then 2022 was the FTX collapse, which was about 77, 78%. So if you put a line from the 2012 bottom, it will literally be a perfect trader's bottom and doesn't deviate from it. So my theory on the next bottom will be extend that line and we'll probably get a drawdown around 65%, say. So and I know we've discussed this, or my bottom for the next cycle, say, is around 40,000. There are stats and data that I back it up with a potential blow off top of around 150,000, something like that. Could be conservative, could be over, but that's kind of the range that I'm looking at for this kind of next cycle.
Yeah, so to break this chart down for people looking, again, we're also looking at Bitcoin price here. Again, in logarithmic terms, that's the black line we see from the bottom
Yeah,
left to the upper right. And the pink, what James is talking about here, is the percentage drawdown from all-time high. So when there's more pink, that means that it's gone down farther from the all-time high in terms of USD and for longer. And so when it's at all-time high, that's when there's more white there. So we
Yeah,
can see the spikes, the big parabolic spikes, and then we can see long, drawn out bear markets there. And so what this seems to me is like this current bear market looks very similar to previous ones, except what you're saying, James, is that the pink comes down a little less each time. It's less of
yeah,
a percentage drawdown each time. And I agree with that. I'd be curious to hear, James, your thoughts. But my theory is that your statement you said remains true until it doesn't, right? We're measuring this in
yeah,
terms of US dollars. I think you're spot on until US dollar becomes so detached from reality that volatility increases again because the dollar itself is becoming more volatile. What do you think
yeah.
about that? When do you think this theory you have breaks to that, assuming you agree with that?
I still think, yeah, I think volatility gets more exponential up and to the downside. I'd like to say, for human sake, that this decade will still be as relatively normal.
I
But I
probably agree with
think,
that. Yeah.
but I think anything after 2030, it's game on. And yeah, then I don't want to start speculating because we're going to start seeing stuff that humans probably shouldn't be seeing.
Well, exactly, because now at that point we're predicting human emotion, and we could speculate based on this past history of data what the future is going to do, but we're pricing in terms of a currency that's manipulated by humans. So,
I think the answer
yeah,
actually is already given to us. It's in the Argentina peso. It's in the Turkish lira. Um, Even the pound, it was at 23,000. It went to 28 in like a second. I think when you really look at certain moments, you're like, that is like a hyperinflation moment or an extreme inflation moment. Um, because the pound or these fiat currencies aren't volatile by nature. They are flat essentially, but to the right, to the downside, you're like, okay, whatever. And this is something that, again, like I have arguments with my dad about this, that he thinks all of this is very cyclical and there's cycles. If you compare the pound to the dollar, and there's the chart's great, all the way back to 1970, it is down and to the right. You can put literally a line across it and it will not break the cycle. So the pound will hit parity within the against the dollar by the end of the decade. And obviously, these fiat currencies that keep depreciating against the dollar, that is inflationary by nature because if you're an importing country, and obviously we're an island, and we did Brexit, so that currency is getting weaker and weaker and weaker against a weakening currency anyway. But imagine when, and I can't believe Putin or anyone that controls oil reserves or anything hasn't priced it in anything else yet. But I guess this geopolitical tension that's going on, I wouldn't be surprised to see that happen in the next, again, say 7 years, but after 2030. Why would he want these currencies that just don't make sense to in exchange for something that's scarce?
yep, yep, fully agree with you there. I just pulled this up since you brought it up here. The pound sterling in terms of dollars. So for those that don't know what he's talking about here, in 2008, 1 pound was $2, and now it's down. What, you guys are down 40% in the last 15
One
years?
point, yeah, it's about
Yeah.
1.2. But if you actually, yeah, like the trading view chart, you go back to 1970, you could use that line from 2008 to 2023, extrapolate it out back
Yeah.
to 1970, and I promise you it hasn't deviated course.
Yeah. So
So
so even this is dwarfed by the losses before that. So
yeah,
yeah.
and again, if you compare that to pretty much any big country, it's bad.
Yeah. Here's the Turkish
Um,
lira. Again, you brought up Turkey. This is the Turkish lira in terms of Bitcoin. This is Argentine peso, so 99.97 loss. Turkish lira is 99.9 loss. But I think, James, what you and I see is this, where most people look at the opposite and they see just Bitcoin going up, right? Or they see the Argentine peso
yeah,
going up. Likewise here. So, I often say to people that, in the same way that you would not say, um, oh, look at how much the dollar's up. Look at how much the peso's down. It's the same thing here. It's not look at how much Bitcoin's up. It's look at how much the dollar's
yeah.
down. So, oh, we're getting into bonds. What's this chart?
So I
Oh,
think my connection just went.
oh, yep, you're back. You're back.
Sorry.
Yep. I was just saying that it looks like we're looking at bonds now. My favorite asset in the world. What are we looking at here?
It was just that I have so many arguments or discussions with traditional finance.
Thank you so much for watching my content and being a supporter of mine. I really appreciate it. It's a lot of fun for me to do, and it's really meaningful to know that so many people are enjoying my content and learning about Bitcoin. I think it's so important for people to get off zero. In addition to getting off zero, it is really critical. It is really important that you also begin taking self-custody of your sats and of your Bitcoin. This is because if you have Bitcoin on an exchange or you don't have proper self-custody, this is going to be a massive problem for you in the future, most likely. If Bitcoin starts having rapid periods of appreciation and there are rapid spikes in demand for Bitcoin education, and for Bitcoin advocates and advisors, it's going to be increasingly important that you have self-custody of those coins. So my message to you is please consider getting that self-custody. Now, you can do that on your own. There are plenty of free tutorials online. There's plenty of great work like that. But if you want somebody to help you with self-custody, if you want somebody to help you take cold storage of your Bitcoin, of your Satoshis, if you want somebody to help you set up a multi-sig vault, to set up an estate plan, to set up a plan for you as a person, an individual, as a business owner, as a charity, whatever the case, I work at the Bitcoin Advisor, and I'm happy to say that I really enjoy it. I love working with my clients. My job is literally to help people buy Bitcoin and secure it properly for years, decades, and generations to come. So if you want to learn about my services at the Bitcoin Advisor and what we do, you should click the link in the description. Here you can read a bit about what I do. You can book a free consultation with me. You can book a free meeting with me. I'll send you lots of free complimentary paperwork explaining how multi-sig vaults work, cold storage, giving you all the education you need. Everything's fully open source. What we do, our main goal is education, helping get coins off exchanges, and people be able to not lose sleep at night when they buy and secure their Bitcoin. So you can feel free to book a meeting with me. The first one is free and complimentary, just to figure out what your priorities are and get that adjusted. But if that's something that could be used to you, I really highly encourage you to take self-custody, whether that's with me or not. Please just do it. But for the many of you that probably will eventually want a multi-sig collaborative custody vault, the Bitcoin Advisor could be the place to go. And so click the link in the description, check that out. Really appreciate your time. And let's get back to that Bitcoin education.
Just a thought. Do you think in like 20, 30 years, and then your children are like, this thing is going to be the next great thing, or you should do this? Are you going to listen to them, or are you going to say, no, you're wrong?
I think about that a lot because, on one hand, the majority of technological innovations turn out to be, let's say, not innovations. But I think that's part of the problem. I think, as I always say, we have less common technologically with the future than the past. And so it's like, goodness, the internet was hard enough for people to embrace. Electricity was hard enough for people to embrace. Bitcoin's hard enough for people to embrace. It's like, what's going to be the innovation when I'm 60 years old? It's
Yeah,
like,
yeah.
but it's like everything has a negative trade-off. It's like these cell phones have trade-offs. I mean, and it's like, we hope that there are more benefits and trade-offs, but it's like, that's why I love not just to talk about Bitcoin, but about like, thinking about tech in general, because I think it's just so important we start thinking about the innovations of the late 21st century now, because they're going to be so fast, probably.
Do you use ChatGPT?
I've not used it personally, but I've seen a lot of the video stuff, the photo stuff. That it's
It's
crazy.
it is for a data analyst. It is the most unbelievable thing I've ever
Yeah,
used on a daily basis. Coding will do all my Python scripts for me. Data analysis, trends, images, everything.
yeah,
It's leveraging the stuff, and it's like you just said, you've got to use what's in front of us. And I just
yeah.
think, and I've seen some people take on ChatGPT saying, "Oh, it was a fad or anything like that." No
No,
way. This is the real deal.
yeah. Maybe Chat GPT itself is going to be gone in 5 years, but it's like that's the crazy thing. It's like, and I say the same with Bitcoin to people all the time, that it's like, the majority of Bitcoin companies today are frankly probably not going to be around in 30 years, 20 years, maybe even 10 years, because it's like, yeah, Bitcoin's around to stay.
Most miners will be gone within 2 years.
Oh yeah, yeah, miners, custodians, ETF stuff. It's like people even within Bitcoin don't realize, like, we've been innovating this fast on a fiat standard. What happens when it's like, okay, 1 in 16 people have monetary rights? All right, it's like the world is changing so fast right now. What happens in 30 years when we 10x the number of human beings with property rights? while simultaneously we reduce at least 60-70% of inefficiency in the world because of fiat incentives. And then we create AI bots that, 100 billion AI bots where that's like just an absurd amount of labor. It's like
Yeah.
it's gonna get wild.
Imagine the percentage of the population that do a job that is just so redundant, and if they
Yeah,
weren't doing that job, what they could actually go and create.
yeah. Well, I often think, one of my big passions is people, 4.6 million people die a year from lack of adequate heating, right? And so one of my thoughts is like, okay, that's 4.6 million people a year either freeze or get sick from, you know, lack of cheap heat every year, which is just crazy. Um, and so I'm like, okay, what if the elimination of fiat perpetually forcing energy prices to go up instead is replaced with Bitcoin perpetually forcing energy prices to go down? Now it's like, okay, let's
Sounds like a
say,
no-brainer.
well, yeah, it sounds like a no-brainer. It's like, okay, let's take just ballpark 10%. Like, okay, 10% of those 4.6 million a year saved. Okay, that's 460,000 people. Okay, next 100 years, that's 46 million people. It's like, okay, that's just 10%. And then what if 1 out of 1,000 of those people is like a super genius that invents a new cure to a disease or creates
Yeah.
some sort of new innovation, new discovery? And it's like, you think it out, and it's like, holy cow, not only is Bitcoin going to accelerate the rate at which AI is having new artificial intelligence or robots accelerating innovation, now all of a sudden you reduce all the inefficiency and you increase the number of people with property rights by 10, 12, 15x, perhaps. That would take a while, maybe decades, but still, that's more rapid than anything we've seen in history. And simultaneously, by saving like easily 1 million lives a year, hopefully a large percentage of them, or at least a normal percentage of them, are super smart people. It's like
Yeah. Yeah, you've
innovation
hit the
is
nail on the
just
head.
hockey stick,
Hmm.
which is again a part of why I'm sure you feel the same way. But for me, it's like Bitcoin is so important, not because the bond market is dying, not because fiat currency and political currency is dying, but it's like, yes, that's all going to die at like a stupid fast rate. But then what's after that, the change after that, it's just going to be
Hmm.
absurd, hyperbolic. I made a video recently talking about a $500 million Bitcoin, and the whole premise of that video was that market cap is downstream of price, right? And so if you took 2% of real estate, gold, bond, stocks, all that, you took 2%, use Bank of America's multiplier effect. You basically do the math. It's like a 100 million, $500 million Bitcoin, right? But that's still in terms of fiat price. That's still when the banking sector is alive. That's still when people only want a 2% allocation. It's like you add in everything we're
So,
rambling on about. It's just,
so do you want a little quick stat on the Bank
yeah,
of America bull market one?
yeah. Give me a
So,
stat. 118 to 1, right?
oh, I've got better. Which
Give it.
on live data.
Give it to me.
The Monday, so what was that? The Cointelegraph ETF fake news. That was not the Monday that when it was the previous Monday, and Bitcoin's market cap went up by $57 billion. And then it was how much money went into Bitcoin at that moment. It was 250 million. So I believe um, that would have a multiplier effect of 228 to 1.
Yeah. 228.
228 to 1 because
That's insane.
400 million would move it by 142 to 1. So yeah, it was about 250 million went in on that day, give or take, and the market cap went up by 57 billion. So that would give it 228 to 1 bull market effect multiplier.
That is what people don't understand, James. Everyone's like, oh,
Yeah.
there's not enough money in the world, but it's like
There's
exchange.
so much
Yeah.
money. There's so much money. But again, then we're talking about the first chart with the long-term holder, short-term holder divergence. So all those coins that are coming off and being held off the market, think how thin that order
Yeah.
book is. And then you've got like that, and then I've got some other charts I can just try and get through after. But it's a it's a supply that's getting cut in half in April. And that ultrasound money meme that Ethereum have got since the burn, however long ago that is, including the merge and their inflation rate from the burn and the merge, it's about 1.2% or
Yeah.
something, and Bitcoin's at 1.7%. In April, we're actually going to
Half.
meme Ethereum. So we're going to have a lower inflation rate than Ethereum, even though that inflation deflation thing in Ethereum is rubbish anyway, because of so many reasons. But yeah, that's where it will change.
That's where all charts die. That's where all charts die. Is when
Oh,
it's
all
when
charts have died
yeah.
anyway. So yeah, like there's no chart that's gospel. There's some charts that I can, if you want, if you let me share my screen, I'll show you.
Yeah. Let's get back to the bonds. Now that we're back here. So yeah, I think everything we've just said is super important. You should have enabled now, but it's so important to think that it's
Yeah.
like Michael Saylor says, all your models are going to zero. But as we're in this transition over the next few years, decades, people want to hear what it's like. So let's bring it back
Yeah.
in to the mega bull instead of hyperbull. Tell us what we're looking at with these bonds here.
Yeah, I think we touched on it previously. I'm not going to go into a lot of detail with it, but the long bond, the ETF, the TLT, I think it has like $95 billion in assets. And that's what the traditional finance analysts say Bitcoin's too volatile by nature, it can't be an asset. But we're now seeing that this asset that underpins pretty much the entire world is at a 54% drawdown, and Bitcoin's now at 50%, 51%. So that asset is now at a greater drawdown than Bitcoin that we saw on the previous chart. So, like you said, all models are destroyed, all rule books are out the window, and the new narratives need to be rewritten because we haven't seen like anything like this in history now.
Yeah, let's
Um,
pound the table on this again for, I love you boomers. I love you guys out there, but let's pound the table again. Bonds, these bonds right here, this 20-year treasury bond is now at a greater loss than Bitcoin when we have these geopolitical conflicts, when we have inflation and interest rates soaring, okay? Like Bitcoin
and
is
yeah,
crazy. And we're only today at minimal adoption. Like in
but
5 years, crazy.
sorry. But what I'm also seeing is people saying, "Oh, TLT's gone down 55%. It must be time to bid, 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 bid." But it's not. We're in this new inflationary environment, this new secular environment from globalization, deglobalization, where America have to probably make their own jobs and take it all away from China. So we're not exporting cheap, and it's going to have to be a whole different rule book. Inflation is here to stay for the foreseeable, say for the next 7 years. So that means rates are going to be higher. If rates are higher, that puts more pressure on bonds. Bonds can go lower. So I wouldn't be surprised to see TLT at 65, 60. It just continues to go lower and lower and lower. And we have not seen pain. We haven't seen capitulation. We've seen huge amounts of unrealized losses, hundreds of billions of unrealized losses. But oh no, I think this is just starting, to be honest.
Well, and that gets
Um,
just say one more thing on that. Then I really want to hear about this accumulation score cohort. Well, that goes back right to what you were just saying before we started talking about the bonds. The fundamental problem with bonds is not some chart indicating it's going to go down. It's not some geopolitical risk. The fundamental problem with bonds is that if Bitcoin is true and if Bitcoin survives, and if it is what we think it is, then this is a paradigm shift, right? And so, in the same way that James and I aren't sitting here saying that, oh, Kodak is in trouble because these charts. The fundamental problem is that photos are going digital, right? That's the fundamental problem with bonds. That's why James is saying that the majority of the pain is head, because yes, it's painful now. It's at a more painful loss than Bitcoin. The real pain, the real reason it's getting gutted, in my opinion, is because we're watching this paradigm shift slowly. And so again, it's like the hyper in the same way the hyper bull case for Bitcoin is not some chart saying it's going to go up. The hyper bear case for bonds is the end of political debt being the predominant way of storing monetary energy. So
yeah,
anyway, with that said,
nail on the
what
head.
what are we looking at here?
So the next few charts that I can just quickly go through is just what's going on chain, like the first chart we showed, but who's actually buying, who's selling, what's going on. And there's a few charts that I just love. I will look at on a daily basis. So this is the accumulation trend score by cohort. So you have the animal kingdom essentially. You've got the super whales with 10,000 Bitcoin or more. Go down whales, I think then fish, crabs, and then you go all the way to like shrimps who own less than 1 Bitcoin, but all play a fundamental part in Bitcoin. One means accumulation at the most aggressive rate. Zero, red, means distribution at the most aggressive rate. And lo and behold, we're seeing the most aggressive accumulation This year, you can see there's dots of blue, so like super whales at the top. That's the smart money. That look at the beginning of the year, they bought January 2023 when Bitcoin was suppressed and really cheap. Then they'll offload it when it gets a bit higher, and you can see that kind of going through. But they've just started accumulating again. But shrimps were going quite hard since October, and it's kind of like builds on itself. So each cohort is now in aggressive accumulation. The last time all cohorts were in this accumulation. So there's another graph that says accumulation trend score 1 or below divisible. So it hit 1 this week for the first time. The last time it hit that was the FTX collapse in November, to show that was value. Everyone bought. The time before that was the lunar collapse back in June. So in 18 months, it's only flashed 3 times, and we're in one of them now. Again, going back to searches for Bitcoin on Google, all-time low, 24-hour hodlers, all-time low. This isn't speculation. People here are just buying it, and this is value buying. So yes, we probably may not see 15, 20. All right, if we have the recession or Binance or anything like that, the Black Swan event maybe, but this is value buying.
Yeah, if I could just, again, I fully understand what you're saying, but I know some people might have trouble deciphering this. So the bottom chart we're looking at here is Bitcoin's price over time. You can see the dates at the bottom of that chart. Above
Yeah,
the little colorful part, there are 6 rows there. Each row is a different cohort, meaning a different, let's say, order of magnitude for Bitcoin holders. And the redder it is, that means the more they're selling. The white and
yeah.
yellow is neutral. The blue is hard, aggressive buying. And so what James is saying here is that if you look over to the right of that colorful section at the top, you see blue, 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 blue. All right. So if you look back, you
Oh,
don't see it
blue.
any other time. You see some people selling to others back and forth, but this is a rare time that literally every cohort, from those with 10,000 Bitcoin or more, so that's what, $35 million, to those with less than a Bitcoin, so those with under $35,000, all these people are buying, and that's just historically not normal, right? You can see that with the colors looking at the past. So yeah,
Yeah,
great chart.
it either happens at the peak of speculation at the top of the bull market, so you get the term holders coming in, or you get it right at the bottom of the market, so there's value buying. We're in the middle of a cycle coming out of the bear market bottom, so this is quite unusual. So this is where value is bought massively. So coming into the half, are
Yeah,
you all right?
yeah, everything's all right. Yeah,
Oh,
just real
sorry,
quick. Sorry to interrupt. I just want to show this
no
chart
problem.
here. So James is referring to Google Trends here. So what he's saying is that we're right here at the right, where interest, according to Google, in Bitcoin is down over 80% from the highs in 2021. So 100 is max. And then we see it continue over the last 3 years, down, down, down interest in Bitcoin. So just to have that visual, what James is talking about. This is
Yeah.
what he's talking about. We're seeing this in spite of that aggressive kind of accumulation we're seeing there. So it's not just that we're seeing everyone buy, it's that we're seeing them all buy now when retail interest is at all-time lows. So yeah,
Yeah.
what are we looking at here?
So coming up to the halving roughly in April 2024, another 5 months or so. At the moment, 900 Bitcoin come onto the market every day. And obviously with the halving, that's 450 that come onto the market each day. And it's just to understand. So these cohorts, again, how we've defined them as shrimps, crabs, fish, etc., is to see, all right, on a net basis, against the issuance. So how many Bitcoin come on over a 30-day period is about 27,000 Bitcoin. How many of these cohort, as an aggregate, are they taking up the supply or are they under the supply? And at the moment, the yellow bar chart is the aggregation of all those cohorts. And in the past 30 days, they have accumulated over 103,000 Bitcoin against the 27,000. So the period, there's a small period between, but pretty much the whole of 2023, we have been in cohorts have been buying more than the issuance, which is very, very good and healthy. 2022 as well, but you get those moments like the FTX collapse just before it, or in May or June where it goes below the blue line. So very small periods, but on a net basis, the cohorts tend to outpace the issuance. So then again, you think of it 5 months forward, I go, okay, that's half the supply coming on. And even if demand stays the same, okay, let's take into a recession or people can't afford to buy as much Bitcoin, but not in a rude way now. We've been in Bitcoin for so long that the people that are buying it on such a small basis or dollar cost averaging, it's not really for them anymore. Uh, in my opinion, it's now for the ETFs here. So we've got the banks, you've got the hedge funds, you've got the huge assets under management, those kind of people. They're the ones coming in who can buy Bitcoin and lock it up for 10, 15 years. So yeah, so you've got all of that with a decreasing supply. It's and people saying halving's not priced in or it is priced in. Even the Cointelegraph ETF, even that news spiked Bitcoin up, and that was a fake announcement. Nothing is priced in my opinion.
I agree with you. The only thing that's priced in is the past, right? We have nothing of the present or the future priced in. So, so for those watching, James is referring to the yellow, up and down bars. The blue line at the bottom is the 27,000 Bitcoin per month he's talking about. That number goes down to 13,500 this coming April in 2024. And then the black line, of course, is Bitcoin's price since late 2021. So what we're seeing is that the yellow is consistently over that blue line, and the blue line is going down by half anyways. So there's this increased demand for Bitcoin versus the Bitcoins being issued on the market. So yeah, James, you make great points here.
Um, I was also going to say something else quickly, but you can see the beginning of the chart starts in November 2021, and that was the peak at $70,000. You can see no one wants it.
Yeah, that's a good point.
I just saw that now, and it's quite
Yeah,
interesting that no
that
one wants Bitcoin when it's going down, but everyone wants it when it's going up.
yeah, yeah. Well, even when it was going down early 2022, people still wanted it, but price was still
Yeah.
going down faster. So okay, so miner percent mined, supply sent. Okay, what are we looking at here? I've not seen this one, so
So understanding miners, and like we talked about briefly, that miners is probably one of the hardest game in Bitcoin. And you've got an all-time high hash rate, you've got an all-time high difficulty, got more competition than ever for mining Bitcoin. What's the state? What are the state miners are in right now? And the miner balance, and I did an insight on this last week about hash rate. It goes up. We obviously get diminishing hash rate every 4 years, but in the last 6 months of every going into every halving cycle, the hash rate really, really takes off again. And we're seeing the hash rate take off again. But to understand to an extent the state of miners and understanding their balance addresses, the orange line is the miner balance, how much Bitcoiners in miners are holding. And from January 2023, it bottomed. And throughout the year, it's on an aggregate upwards trend, which shows in a way miners are reasonably healthy. They're not selling. So then you've got the blue line, which shows, or the blue bar chart, which shows if they're above that red line, they're selling Bitcoin, or if they're below it, they're actually keeping the Bitcoin, they're mining for their treasury reserves. And it's below the red line the last couple of weeks, showing they're probably doubling down for the halving. They're not selling. The miner balance is going up. So I think on a net basis, the share price is doing unbelievably this year, even though it has gone down a bit. So I think miners at the moment are in relatively good health to an extent. But if that price of Bitcoin isn't going up, where I think it needs to probably be about 40,000 by the halving, then there'll be some repercussions. So I think now till halving, they're okay. But if they're not at 35, 40 Bitcoin price, well, I'm saying that's at 33,000 now. So another bit, I think that's where miners might be in trouble.
yeah, I don't think many people outside Bitcoin understand how difficult it is to mine Bitcoin profitably. And it's simply put, because you're competing against literally anyone in the world. You're trying to make your electricity cheap, but anywhere in the world, someone can make cheaper electricity, which obviously gets into the second order effects. That's how it incentivizes renewable energy and everything else. But yeah, as far as Bitcoin price, I think you're probably right here. So,
Okay. Um, I had to.
oh
I had
boy.
to. I had to.
Oh, you
It
had
was too
to.
hard not
You
to.
had
I
to.
had
All
to.
right. Tell us what we're
I
looking at
was.
here, James. Yeah.
I
What
was
are we
like,
looking at?
I was like, should I, shouldn't I? But it'd be rude not to. That we're just looking at Bitcoin in your political fiat currency that you talk about, up. Um, oh, this is only till March, but it is up 100% year to date, give or take, but it's up 40% here since March. And then we compare the performance of two of the biggest altcoins, Ethereum, Binance, and they are bleeding against Bitcoin. 24% down, Ethereum, and again 50% for BNB. But I think it's probably even more since the beginning of the year. Um, Great when you measure it in USD because again, over time on a long enough time frame, most assets do go up. But I think measuring it in Bitcoin, again, on a crypto basis, I think it makes perfect sense to measure it against the top one. So I don't see it really measuring against US dollar is relevant for crypto anymore. So I think the benchmark's Bitcoin. If you can outpace Bitcoin, you've done an unbelievable job. Solana has actually outpaced Bitcoin, but you're seeing on the next chart I can show is
Yeah, go for it.
the Bitcoin Ethereum market cap dominance. So in a nutshell, you've got a pink line, you've got a green line, and that looks at about 85% dominance kind of thing. So that shows is Bitcoin outperforming or is Ethereum outperforming? And during bear market, so when the chart starts, you can see the black lines above the green line, and that is peak Bitcoin dominance. That bear market's going on, it's a grind. All the fun money is kind of going out, going into Bitcoin. But then we go into the bull market. Ethereum, as we know, is higher beta Bitcoin. Don't know why, but it is. And you see these periods of outperformance. Get to the bear market 2019, Bitcoin outperforms again. But as soon as that 2021 bull market started, bang, Ethereum hit the pink line and has been ever since mid 2021. And the funny thing is, even in this year, when Ethereum's 30, 40% down against Bitcoin, it's still in some form of dominance against Bitcoin. So, like when we're talking about bonds haven't even seen their drawdown or their capitulation, we have not seen peak Ethereum, peak Bitcoin dominance yet. We are where are we? We're in the
Wow.
relation of 2018. So we're
Yeah,
not even started the bear market for that.
I've not seen this yet, but this is an amazing chart. So basically what we're looking at here is that in the olden days, 2015, 2016, Bitcoin had massive market dominance, and now Ethereum still has market dominance. And, when we're trying to price things in the future, obviously we have to look to the future. And there is massive demand for Bitcoin. There is not much demand at all for Ethereum, and I'm biased because pro Bitcoin, but it's like, I think it's pretty objective that there's far more interest in Bitcoin right now. And I think if I had to guess, I'd like to hear your thought on this, but I think the FTX thing with Bitcoin siphoned away so much demand that Bitcoin artificially has a lower market dominance. And I think a big part of that too is it's far more liquid. Ethereum
Yeah,
is, tied up, it's centralized, 70% of it was pre-mined. So it's like Bitcoin has more interest in the future, at least for the foreseeable future. And it had that whole FTX thing that was, targeting Bitcoin disproportionately. And it's far more liquid and free market than 70% pre-mined. So uh,
yeah.
anyway, it's
But
incredible.
I think my next chart actually answers your question about what happened with the FTX collapse. There were certain moments when we look back in history of Bitcoin, something changed, like it just changed. 2020 COVID, the exchange balance peaked and it's been going down ever since. COVID was a huge transition for Bitcoin. It accelerated Bitcoin's history or future, whatever it is. And it changed everything really, remote working, whatever. But COVID was a big changer and the FTX collapse was also a pivotal moment in Bitcoin's history.
Yeah, James, I love
Um,
you said that because I say all the time that the bond market changed in March of 2020. So I love you said that. I don't think you know that I say it all the time, but I do. So
no, that's
yeah,
fine.
so what we have a few minutes left. What else are we looking at?
So this is just going back exchange withdrawals, exchange deposits. So that's me depositing on the exchange or me taking coins off the exchange. The green is exchange deposits and it's outpaced withdrawals for its entirety of Bitcoin's history. Deposits always outpace withdrawals. But November 2022 was the moment where withdrawals peaked over deposits for the first time. Um, And maybe the lunar collapse was like the trigger, FTX collapse was the actual causation. And since then, withdrawals have outpaced deposits since. And that's not a coincidence. The SVB collapsed again, that triggered a little surge as well. All these moments are underpinning why you have to take your coins off the exchange, why Bitcoin's Bitcoin, why you have to hold it in cold storage. But yeah, FTX collapse was for me, like COVID, that pivotal moment on what's going to happen in the future.
Can you take us off share screen real quick? I want to emphasize
Yeah,
something when it comes to this chart. So, okay, like James is saying, like all these charts you've been looking at, I just need to say this because I talk to my subscribers all the time. I talk to people all the time. And it's like, it needs to be emphasized. We have not seen Bitcoin's scarcity yet. Okay. Like you said on that last chart, first time ever that withdrawals have exceeded deposits was November of last year. Okay. We have the halving coming up. Like you said, 2020 was peak balance exchanges. Okay. It's going up for years and years before that. And this is the first time that's been going down. So in all these ways looking at it, we are perhaps mere years on the cusp for the first time feeling Bitcoin's scarcity, right? And so these bull runs going up 5x, 10x, 20x, it's like, in light of that, in my opinion, this is nothing. And that's why, like James was just saying, you have to get your self custody down. You have to figure it out. And I say this all the time. It's like, if you're delaying getting your coins off exchanges, what do you think happens when the government says, Coinbase, cease withdrawals for 90 days when the US prints ourselves into our own allocation? It's like, if you have your funds on exchanges, you're in trouble. If you're trying to order a single sig device, you're going to have a lot of trouble getting it ordered if everyone else simultaneously is ordering that. So, I know get your keys off exchanges is something you hear me and James and everyone else talk about all the time, but it's like, it really is urgent because by the time the majority of people realize I should be taking self-custody, it's like everyone's going to be doing it simultaneously.
yeah.
Everything's going to be backlogged for months. You're going to be competing with businesses and charities, or you're going to be competing with people willing to pay 10 times more than you. So please, emphasizing, check out self-custody, do it. Single sig, multi-sig, cloud custody, multi-sig, getting your hardware device, whatever it is, just do it. Because I mean, I hate to say it, but I know a lot of people are going to get really burnt and are going to be really mad when this happens because it's going to be far more dramatic than people realize, in my opinion. So, okay,
Yeah.
rant over.
No, it's fair. It's needed. We need to go into a period of finance where people can take custody of their own finances and not rely on banks. St. James's Place in the UK is the biggest financial wealth management company in the UK, and they've just stopped property withdrawals from their property fund. And obviously, for us, we know the banks, it's the fractional reserve banking. But I think for the layman, the normie, to be like, oh, I can't actually withdraw, then the sirens go off, and that's the free fall. So if you're looking at UK bank stocks right now, Lloyds, Barclays, NatWest, they are down big. Hargreaves Lansdown, all these companies, financial bedrocks of the UK economy. Firstly, they haven't ever recovered since the 2008 bailout, but they are down big. So yeah, again, if you have over the FSCS protection, which is £85,000, that's going to go straight away. But then you have it from a different perspective that I can't remember the stat, but there are X amount of bank deposits, say a couple of trillion in banks, saving societies, but we have something similar to you with the SIPC, I think it's called, or something like that. That we have FSCS, which is you're protected up to £85,000 and only £85,000. There's only about 400 billion that's trying to protect about a couple of trillion pounds. So it's like, where's that difference going to come from? Where are they going to come from? Because the banks are going to collapse. We know that because they should have collapsed in 2008. They're on life support. So you've got a misallocation of 400 billion protecting, say, 2.5 trillion. Wonder where the difference comes from.
The same thing, what he's saying with the UK, the same thing's true in the United States with the FDIC. It's off.
FDIC.
Yeah, I think it's 125 to 1. Like I think it's something like that. Don't quote me on that. I'm going off memory here, but it's not 10x to 1. It's closer to 100x to 1. The FDIC is short bank deposits.
Yeah, and we saw it in March with the regional bank collapse. We've got
Silicon Valley Bank. Yep.
BTFP programs, all these programs just to backstop the fiat Ponzi. But how the cracks are coming. but how much more can they do? So it's
Which
interesting.
which of course we're not saying you won't get your money back. You'll get your money back, but you'll get it in debased.
Devalued.
Yep, yep. You'll always get your social security check. You'll always get you'll always be made whole, but the currency you're being made whole in might be worth, 50, 60,
Yeah.
80, 90% less. So that's what we're saying. So all right, you have a final chart to close us out here?
Not a final chart. I've got a
Nope.
final
All
question
right.
for you.
Sure.
I've got a final question for you. So I was actually doing this research before. In the past 5 years, priced in Bitcoin, what has outperformed Bitcoin? All assets.
I think orange juice is one of them, right? Maybe, or at least 2 years. I think orange juice
No.
had it. No.
Well, yeah, orange juice in the past maybe a few years has definitely done
Yeah.
it, but I
Yeah.
had it on the 5 year chart.
Yeah. So maybe we
And
should sell orange coin for some orange juice. Yeah. Maybe that's a better
yes,
store of value. Yeah. Okay.
but and I'm also not talking about crypto, right,
Yeah, yeah,
Ethereum or
yeah.
anything. And two of them actually is unfair because they're almost like beta Bitcoin. So I'd say it's
I
actually unfair.
I
So there was
I
actually
don't know.
one thing. There's one thing that's
What is it?
outperformed Bitcoin.
What is it?
Advanced micro devices. It's done
Okay.
really well.
That's interesting.
Yeah. The others was Marathon, the Bitcoin miner, and
Yeah,
Tesla.
that's cheating. That's cheating.
Yeah.
Yeah.
But again, it kind of comes to the point that, all right, so Bitcoin's outperformed everything over a 5 year period. The only thing that hasn't is advanced micro devices. And that's either being extremely unbelievable at stock picking or yeah, it's just the issue with stocks is you've got to invest all this time and effort into choosing the right one, keeping up with the
Yeah.
news, and you don't have to do that with Bitcoin. It's a completely different idea. I think again, traditional finance analysts just can't get their head around it. I remember saw this week that Bob Elliott, who great analyst who worked at Bridgewater with Ray Dalio, he can't get Bitcoin because he doesn't know what the future holds for Bitcoin. Um, Irrespective of its past performance, which deserves an allocation because of its past performance and its longevity now. So yeah, it's rewriting the rule book on investing and finance. And anyone that tells me that they're a financial advisor or they've made it and they don't have an allocation to Bitcoin, I can't take them seriously.
Well, and funny enough, I talked to a lot of financial advisors, being in my business and work and everything. It's like most of them that do understand it, they actually can't say anything. So,
Yes.
I guess to give your financial advisor friends some credit is that a, a small percentage of them do get it, but the vast majority of that small percentage can't even talk about it, right? So
Yeah.
I think that's worth staying. But you mentioned future, like what's the future of orange juice? What's the future of that one stock? It's like, well, you're buying the productivity of that isolated thing. You're buying that specific company's future. You're buying the future of oranges, right? And it
The
doesn't make
scarcity of
sense. Yeah.
oranges.
The scarcity. You're not even buying the oranges. You're buying the scarcity of oranges. You're buying into a pessimistic view that we will make less oranges into the future. And so, which gets back into the whole savings and inherently optimistic function. But the thing is with the company, you're buying that tiny little minuscule portion of global prosperity. And the view of
Yeah.
Bitcoin is that if this is what we think it is, you're buying everything, right? And so in that sense, it's like lower risk because you're not gambling on a tiny little corner of the puzzle. You're betting on the whole puzzle, right? So,
Yeah.
and it's crazy,
But you're right. The Hasbro CEO died, passed away in 2021, and that's kind of when the share price also collapsed. Obviously, there's no CEO in Bitcoin, and it takes all that risk away that there is no central authority or central being.
Yeah. All right, James, thank you so much. I think the takeaway for people is get off zero, buy some Bitcoin just in case it is coming after the whole puzzle. And once you do so, get your custody down. Do it because people like James, people like me that look at this all day, every day, that obsess about it, we're telling you, scarcity has not even begun to be priced in. So, get off zero, take self custody. James, thanks a whole bunch. Thanks for your time. Thanks for your charts and
Cheers, Luke.
insights. Yeah.
Appreciate it.